It's late in the evening, lost on the side. I've been sad with you.
Hey everyone, so I'm here today to speak to you about why I think the world will be made up of many small companies in future rather than a few big companies, how we stay small at AngelLIst, and then why this is generally a good thing. Before I start talking, I'll just give you a tiny bit of background so you have a bit more context to some of the things I'm saying. So AngelLIst is a big fundraising platform and sort of a general networking platform for businesses. We see thousands of new deals, new companies come to us per week. We have tens of thousands of investors on there and hundreds of thousands of companies, over 300,000 now. And we raise about $20 million a month for companies. And then all the companies that have come to AngelLIst have now gone on to raise billions and billions of dollars. And we're a team of about 20 people. Now, I'm not saying we're the most leveraged team in the world, but I think we do a pretty good job with a small amount of people. Before I was at AngelLIst, I started a company called Top Guest, worked at Macquarie, went to law school, and did a few other things. But this is not about me, this is about a general theory of small firms. So let's go into a little bit of theory. And bear with me, I'll get a little bit abstract here, and then we'll drill down after that into some examples of how we put this into practice at AngelLIst, and then go back up and sort of say why this is this or why is this a good thing. So there's this guy called Ronald Coase, and he's an economist, and about 77 years ago now, he wrote a paper called The Nature of the Firm. And in The Nature of the Firm, he asked this fundamental question: why do we have companies at all? Why don't we just have little contracts between lots of individual actors? And so, to start this discussion, he separated out two different types of costs at a company: internal costs and external costs. Internal costs are things like are about organizing the factors of production within your organization. Things like meetings, bureaucracies, processes, and stuff like that. External costs are the costs of organizing the factors of production outside of your firm. Building a supply chain, building a brand to reach your customers, etc. Now, he posited that as the firm's size increases, internal costs increase, but external costs decrease. So, practically speaking, if you work at Coca-Cola, you can reach customers in all corners of the globe because you have a really extensive supply chain and you spend billions of dollars on marketing so that those customers know about you, but you probably have a lot of meetings because there are hundreds of thousands of employees to coordinate. So, let's just say this red dot represents the optimal size of the firm. Now, this thing called the internet has come along, as I'm sure most of you know, and it allows you to do all sorts of wonderful things. Specifically, it massively reduces the external costs of coordinating, or costs of coordinating factors of production external to your company. So, you can reach your customers all around the world by just opening up a little store on Amazon, or buying some Google AdWords so that they know about you to advertise to them, or even just having a good Twitter account. Infrastructure that used to be incredibly expensive to build, like telecommunications infrastructure to send out billions of SMSs per month, or payments processing infrastructure, or postage and logistics infrastructure. You know, in the past, you had to have a very big company to have access to this infrastructure, or either build it yourself or do a big enough deal with someone to get access to it. Today, you can start processing payments with a single line of code. You can send billions of SMSs per month with zero fixed costs and just pay per message. So the internet has massively reduced the external cost of a company, the cost of organizing factors of production external to a company. That said, internal costs have stayed the same. It's still just as hard to organize people as it has ever been. When you get enough people in a room, it becomes complex enough and difficult enough to get things done as ever. So if external costs are massively reducing thanks to the internet, but internal costs are staying the same, well, the optimal size of a firm is smaller. And so we've seen this red dot move to the left. So that's the theory that I wanted to just start with today, and that is that the internet has massively reduced the external cost for companies, and thus the optimal size for a firm today is much smaller than it was, say, 50 to 100 years ago. Now, linking it to AngelLIst, we really believe in this. We really believe that this is a strong secular trend, that firm size is, on average, reducing. Now, we can assume, I think fairly safely, that big companies will not all of a sudden see this trend and want to become small. It's very hard to make a big company small. So what we're going to see, I think, is more of the economy made up by new, small companies. And at AngelLIst, how we're helping this and how we're sort of both pushing but also riding this trend is by reducing the cost of starting a company, by making fundraising cheaper, faster, and easier. And then moving into other verticals as well, like recruiting or business development. So this is my theory, and this is how we're riding this trend and sort of pushing it a little bit forward at AngelLIst and doing our thing. So if it's optimal to keep a firm small, and a lot of you here today already have small firms, how do you stay small? Now, I don't just mean how do you stay small for the sake of being small. I'm sure a lot of us in the room don't want to run a coffee shop or a restaurant and just be small. We want to run a small but high leverage organization. That is one with very few employees and very low internal costs, but is able to make a big difference in the world. And that's what we want to do at AngelLIst as well. So this is our challenge. How do we continue to have an impact on the world but stay small? Well, we do a few things. So the first thing I'll say, which is sort of a feature of our culture at AngelLIst, and it's not explicitly talked about or written down anywhere, but it's very much implicit in every product decision we make, is know your hourly rate, know your value. So when you're thinking about a project, if it's only going to affect a small amount of users, or conversely, only work on something if it's going to affect a lot of users, millions of dollars in transactions per month. Otherwise, don't work on it at all. Now, this is sort of a chicken-egg situation. Like, if you don't have this attitude, which is often comes across as a very arrogant attitude, then you will probably get caught up in working on lots of small things. So this is a sort of, it goes back to that old adage, I don't get out of bed, for more than $1 million a day or whatever it is. This is more an attitude thing, but we find it pretty helpful. You're never going to have leverage if you never think about leverage before you start projects. Another thing we do is we aggressively lower our coordination costs, so our internal costs of organizing everyone at the company. A couple of weird things we do at AngelLIst is there is only one meeting per week, midday on Monday. That is it. You cannot book a meeting room. No one has a calendar internally. You can't book time with anyone else. All meetings are ad hoc, except for the one meeting a week on Monday. We don't use email internally at AngelLIst. It's all real-time chat, much more ephemeral. And the effect of both of these things is that if it's worth doing, you will get everyone together and you will do it now. And if it's not worth doing, then people don't have to keep it in their heads and don't have to think about it. Email is this funny thing where you can put something on someone else's to-do list just by sending an email to them. We don't let people do that at AngelLIst. And so we don't create this inventory, this big burden internal at our company, by letting people do all this sort of stuff, because that sort of thing massively increases your cost of production internal to a company. So lowering coordination costs is very important, and we do that by making sure people don't have meetings, no email, all that sort of stuff. And then another thing we do, I've just gone way ahead, is make sure that we automate as much as possible. So the classic story of this at AngelLIst is AngelLIst Talent, which is our jobs product, not on the fundraising side of the business, was for the longest time, until very recently, run by one person. Now, this is a product that matches people to thousands of jobs per month. This is a product that isn't the biggest job board in the world, but is much bigger than many others job boards staffed by hundreds of people, and it was run by one person. That person did all the programming, did almost all of the design, did all of the customer support, and developed, in as much as there was business to be done, did all of the business as well. This person, if they were receiving hundreds of emails about a feature not working, they just had to fix it themselves, otherwise the whole product would collapse. We purposefully made this product only staffed by one person because that forced that person to automate as much as possible. So we're very aggressive about automation at AngelLIst. If anything is taking too many people, we automate it, and if we can't be automated, we dump it. Because if we don't do this, before we know it, we'll be a company of hundreds or thousands of people, and we don't want to do that. So that's a couple of ways in which we stay small at AngelLIst. Now, why do I think this is all a good thing? Doesn't the world only work because we have big corporations capable of great things? Is this really a realistic view? Is this something that we should want? Why am I celebrating startups? Am I just doing this because I'm at a startup? Because you're at all startups? No, I think this is a really, really good thing. Not only do I think this is something that we can't really avoid, or that is just this is a strong secular trend, but I think this is a very positive and strong secular trend. So the first reason I think it's a great thing is that smaller companies move faster. Personally, and I'm sure all of you want to be at a company that is able to move as fast as it needs to do really well in the world. We find at AngelLIst, given that everyone is their own boss, we have a company of one-person startups, decisions get made more quickly, and we can react to the market more quickly than any of our competitors. When there are only 20 people in the company you could ask to help you out with something or for permission on something, it can only ever take, call it an hour to get anything done, to get any group of opinion from a group of people. When there are only a small amount of people at a company and the expectation that everyone is running their own startup, so to speak, you just launch things without necessarily asking anyone. And this speed manifests itself in all sorts of parts of the company. Not just in how quickly we release products, but how quickly code is deployed, how quickly things are tested, how quickly we test business models, how quickly we do deals with companies, who we work with. We don't work with partners that take too long to get anything done. So it makes a lot of our decisions much easier, sort of having this very, very aggressive attitude. The next thing, being a small company, I think, allows for a lot more resilience. So if you allow me to get a little bit abstract again for a minute, what you tend to do when you have a small company of, say, less than 20 people, and I think that's, for a bunch of reasons that I can't go into today, I think that's the magic number, around 20, the number after which a company starts getting a little bit unwieldy. What you tend to do when you only have 20 people at the company is you tend to hire generalists, people that can do everything. So, for example, at AngelLIst, on my fundraising team, everyone can code, everyone has started a company, everyone has worked in either banking or consulting, and everyone has gone to law school, which is a very weird combination. And it's a combination which allows everyone in that team to sort of pick up any project and run with it. So why do I think it's good to hire generalists, and how does it make you resilient? So small companies, you tend to hire generalists. The thing is that all of these natural systems in the world that we have to deal with every day are very, very complicated, are very, very chaotic, very stochastic in terms of the representation of the outcome of those systems. So what I'm saying is you can't really plan for anything in this world. It's far too chaotic for you to come up with some grand plan of how it all works. So if you can't plan, what can you do? Well, you can react, and you can react really well. Now, what is it about hiring generalists that allows you to react really well and be resilient to anything that happens in the world? Well, anything that comes to a generalist, they can deal with because they've got the skills to deal with those things. So again, to recap this sort of other little abstract section of this talk, at small companies, you tend to hire generalists because you need everyone to do everything. And this is a really good thing because all we can do is react, and generalists are the best at reacting. And once you hire a team of generalists, which you have to do at a small company, you'll find that you're very resilient because you can react so well to everything. Now, just to finish up, before I perhaps open to some questions or before I sort of expand upon anything anyone found interesting today, I think this is actually a really good thing for the economy as a whole. So, to borrow a term by an author, Nassim Taleb, I think it makes the economy anti-fragile. So what I mean by this is, if we have an economy made up of 1,000 small companies instead of 10 big companies, if any one of those small companies fails, it just doesn't really matter. Whereas if any one of the 10 big companies fails, it is absolutely disastrous. And we've seen this in many times in many industries. The car industry in America, for example, an employer of hundreds of thousands of people, but an industry in which there are only a few important companies. Well, we've seen if one of those companies collapses, the whole industry collapses. And the government has to spend a lot of money and time and effort making sure that not only that whole industry doesn't, making sure the industry doesn't totally collapse and have really negative effects for the whole economy and unemployment. We've seen that with banking. When one bank that wasn't necessarily doing the most important work on the planet, but that affected a lot of transactions nonetheless collapses, the whole economy collapses and caused the crisis we had in 2008, 2009. A better model is having industries made up of many small companies that communicate with each other much more efficiently and can still achieve, I posit, can still achieve the same things as a few big companies because they're just doing them more efficiently. This is a future in which business development is done through APIs, which companies communicate with each other and do deals with each other much closer to real time, in which anyone, as I said, if any one company fails, it doesn't really matter, in which companies are more closely held by the people that work at those companies. People care more because they have more skin in the game, where people don't produce products that are then sold to someone and repackaged and sold to someone else, such that no one actually cares about making the product work anymore. A more closely held set of companies held by its employees, smaller companies where you know your customer better, smaller companies where you have to do lots of deals more quickly with other small companies through APIs and modern communication technologies. An economy made up of these companies is a much less fragile economy, is an economy that is more resilient, that can move faster and can react to all the uncertainty that we just naturally have in our systems. So that's my contention, that the world is moving to one made up of many smaller companies, that there are lots of ways in which you can stay small but still be a very high leverage organization capable of changing the world, and that this will allow an economy that can react faster, that is more resilient to shocks and uncertainty, and is much less fragile. So hopefully I've made you think a little bit today, given you some ideas on how you can stay small but still be a high leverage organization. And then if you want to talk about AngelLIst more generally after, I'm more than happy to take some questions personally. I'm not sure if we wanted to open the questions now. If anyone has any, shout out. No need to wait for a microphone. But otherwise, thanks.